Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics, live in Puerto Vallarta, where we're getting set up for Silverfest, October 26th to 31st. And fortunate to be joined by my dear friend Rafi Farber of the Endgame Investor, one of the best economics columns on the planet, in my own humble opinion. And he's been working on seeing if there actually is any metal in that COMEX that you can get out of there, taking delivery of a contract. We did part one a couple of weeks ago and going to kick in for part two today. Although before we start, I'd like to point out I have my First Majestic Silver shirt on today. Who has kindly sponsored this video, brought you information about silver. Keith Neumeyer stood up telling me what Wall Street never will. And just in the realm of things that maybe the birds whisper in the trees around here, that is clearly not legal licensed financial information because I don't have the credentials of Goldman Sachs, JP Morgan, or the CFTC, obviously. But my guess is that there will be a day when people will no longer say the manipulation is never going to end. And I believe on that day, it's going to be a lot of fun to watch the First Majestic Silver price. So with that said, Rafi, welcome on in. And how are you doing today?
I'm doing very well, Chris. How are you?
Well, I'm doing well. It's good to be here, doing the hard work, scouting out locations for a big party. I'm pretty sure there's a high-grade silver deposit underneath this pool, but we'll save that secret for now. And what can you tell us about what's been going on? We've been attempting to take delivery of a COMEX silver contract, see if they actually have anything in there. What have you heard, and what can you tell us?
Well, the most interesting thing that I heard from customer service is after the initial problems, which I'll get into in a second, I asked this customer service rep, and I have it recorded. Has Interactive Brokers, which is the brokerage I'm using to take delivery of this contract, have they ever organized a physical delivery for any contract, any physically delivered contract ever? And he said, no, this is the first time. So at first I thought they were pulling my leg and just making it impossible, but now it seems more likely that they just don't really know what they're doing and they're trying, or at least the people on the bottom, they're really trying to help me. I'm not sure, if we get to the top, if they are trying to stonewall it or not. So I can't really tell what's going on, but technically this is what's happening. I submit an order to receive on the contract, and it goes through, and then it says it's pre-submitted. And then it gets canceled within 24 hours saying that there's not enough cash in the account. I put more cash in the account, and then it says there's not enough cash in the account. So then I asked them how it's being calculated. Because you have first of all the value of the contract. You got to multiply that by 5,000. Then you got to add 10% because the actual bars that you were supposed to get ownership of when you stand for delivery can be 10% more. That's the maximum. So if they are 10% more than 1,000 ounces each, you have to have the cash in your account to count for that. You also need to have the margin in your account that will stay like a margin buffer between the value of the contract plus 10% more to keep ownership to maintain the contract, because it works on margin requirements. So I put all that in. It took 3 tries, but and then it keeps saying that I'm short on cash. So I call them. I'm saying, so what is the math? What exactly? How much money do I need? And I will put that number in. And they say, we don't know. So my next move for now is I'm going to try to stand for delivery again. And if I can't and it gets canceled again, I'm going to submit a ticket manually through the system saying this is the price of my contract and I want to file an intent to receive. Please confirm this. So it doesn't go through their algorithm, it goes manually through customer service, and we'll try that.
Yeah, and Rafi, at one point you mentioned that it seems to you almost as if it's one of those things that's designed to maybe not be impossible, but make it as hard as possible so that people don't go through the exercise. Now, I don't know if that was a new feature Interactive Brokers added, but like you said, they said you were the first person ever to try it. Is that your feeling that maybe they're not going to say, well, A, do you think we'll ultimately get the bars? And B, do you think they're likely just trying to make it as difficult as possible for anyone to get any metal out of there?
Well, my feeling is that I'm not accusing Interactive Brokers of anything. Let me make that clear. At least the people that I've dealt with. I've dealt with some very competent customer service, some incompetent, and but I know like I've talked with them for a while now, and I know which ones to deal with by name. So my feeling is that they're really trying, and they don't necessarily know what's going on above them. They're just technicians. They're trying to help me. And there was one problem where I was trying to take delivery of the August contract, and it went through, and I had the cash. And then the system said that it couldn't value the contract at this time. So they told me maybe it's not liquid enough, and so therefore the deliveries aren't going through the algorithm or something like that. So I had to roll over, because otherwise I would have been forced out of the contract, and I wanted to do that on my own terms instead of a computer deciding what price they were going to sell the contract at. So I had to roll out of August into September, and I'm trying again. But yeah, my feeling is they're just trying to make this, or somebody on top is trying to make this very difficult. And the way that it was explained to me by someone who used to work at the COMEX is that brokerages don't make a lot of money from standing for delivery. It costs them a lot of paperwork. It costs them a lot of money. And they get money on trading the paper, the contracts, because that doesn't cost them a lot, and there's margin on that for them. There's profit margins. So I think they make it lazy or make it very difficult, especially for retail traders, to get these bars. And once we get the warrant, I'm told that then it's just logistics. But getting the warrant's going to be the hard part. And I can't say if we're definitely going to get it, but I'm going to keep trying. I'm going to do everything I can. And whether we get it or not, this will be documented, and we'll have the whole thing.
Well, I sure appreciate you doing that. And maybe we'll switch a little bit here, kind of related, although I would think significant, and something else that I know you cover. It looks like the banks have been reducing some of their short positions, at least according to the COT and other reports in the past month or so. Is that what you've been seeing as well?
Yeah, I've been seeing what I've been paying attention to is I'm not sure I really trust the COT reports. Maybe they're accurate, maybe they're not. But I talked to a guy who has a family office, and in terms of the disaggregated report, who's who? Is it the swaps of the bullion banks, and the commercials are the producers? And he said something like this, which kind of shocked me, that if you want to be categorized as a producer, but you're really a market making swap, all you got to do is buy a certain shipment or some kind of physical position that you can catalog as big enough to qualify as a producer, even though you're not a producer, just to hide yourself into that category. Is he telling the truth? I think he is. He had no reason to lie to me, and it doesn't mean that everybody is lying, but it does mean, I think, that it's very easy for banks who want to hide what they're doing to be categorized as something else if they choose to do that, if they think it's advantageous to go through those costs to fool the disaggregated COT reports into traders thinking something that they're not. So that's possible. But what I think cannot be faked is the amount of open interest, because that's all the positions that exist on the COMEX. And what I've been seeing there is that open interest in silver has gone way down. We're at the lowest since the March 2020 bottom, just around there. And that to me is significant, because I think after today's smash, which I think was catalyzed by the strong jobs report and everyone thinking that the taper is going to happen and then the taper is going to stop inflation, but it's not. You're going to see even lower, much lower open interest numbers, and that when we're being punched around and losing the sentiment game, that's the time to buy another trench, even though it feels it's hard to do it. That's why trading is hard.
Well, I think what you're saying makes a lot of sense, although having experienced a week of, shall we say, when more safe stuff is removed, sometimes we have a different perspective on things. Would you say it's fair that, while we cannot confirm it, we also probably can't rule out the possibility that, given the timeline, that perhaps Basel III was to be somehow connected? Because essentially, maybe if Basel III actually perhaps was some form of what some thought it might be, and then now you see the banks reducing their short position. While again, we can't confirm it, that would actually be one possible explanation that could fit. Would you agree there?
Yeah, of course it's possible. Look, I'm not shooting down anything you're saying. I'm pretty sure manipulation exists in some capacity. I happen to think that when you see these smash downs, the banks are pretty much looking for some kind of catalyst to capitalize on. It's not only gold that was smashed. I think it was also the NASDAQ and some commodities. I haven't been paying attention to exactly what's happening today. But instead, I don't think they just pick a random day to smash gold. They pick a catalyst that would bring down gold anyway to sell in concert. Yeah, to sell in concert and amplify the move. I mean, that's probably what's happening. And you know, there's nothing we can do about that. All we can do is buy the dip. And understand that economic reality can only be subverted for so long. Like you can, you know, that old saying, you can fool most of the people some of the time and some of the people most of the time. You can't fool everyone all the time. It's not possible. So it's a game. It's a war of attrition. It's a game of stamina, and reality is going to win because look, reality is on our side no matter what is going on.
Well, I would agree with that, and especially when you say you can't fool everybody all the time. Obviously, if you're still on the planet with us, I mean, you're infinitely smarter than some of the folks, I think, who may be doing certain things that will leave nameless. Although I have a little bit of a trick question for you. I ran this by Rob Keats and you guys last night. Somebody got it, but we'll try. We'll give you a shot if you'd like to have some fun on this one. What do you say?
All right.
How likely do you think it is that the Fed raises interest rates in 2023?
I'm not sure the dollar will exist in 2023 as a fiat currency or as an unbacked currency. They might have to they might be forced by that time to back it with the remaining gold to Fort Knox if there is any. But that itself would be raising real interest rates. But if the dollar still exists in this system, raising interest rates maybe by a quarter of a point, half a point, but you can't do much more than that without collapsing the entire debt pyramid. So raising it meaningfully, I think, is impossible.
Well, I'm just going to go ahead and brag about my incredible eye for talent for a moment, if I may, because Rafi the Wise, you didn't get what I was thinking, although you put in a disclaimer which gave you legal clearance, brilliantly done by your subconscious, because you said under this system, but if there's a reset this year or some other, then actually you could normalize interest rates. I think that's what perhaps if you review, not you, but if when I or others review Bretton Woods or London Gold Pool, it's really just a shuffling of a couple digital digits here and there. And I was thinking about that yesterday because to me, I don't know, I've thought some sort of bankruptcy reset, you know, was inevitable. History shows us that pretty clearly. And I mean, it doesn't take rocket scientists to see where this baby's headed with Print 'em Up Joe. In between meetings and stuff, you know, firing off 500 billion packages. So, yeah, it's interesting just when you think about how things could be looked at differently, and who knows whether that will happen or not. But, Rafi, perhaps the last one for today here before we wrap up. I've been thinking about a lot of things, including what happened in February with silver and silver squeeze, and then we got that bizarre report from the LBMA, which again, JP Morgan, Goldman Sachs, those are member firms. So when it seems like they wouldn't accidentally say that we were weeks away from running out of silver, fears were emerging. Then we got that miscount thing a couple months later, which was the exact amount that you, Rob Keats, and others that we thought was impossible to have been added that first week of February. And aside from Jeff Christian telling us we're all a bunch of Fruit Loops, no one's really explained that. So and I find that's the way news in the financial market often goes. You like hope people forget it, but I mean, those elephants are still sitting there. And what if we actually were incredibly close, to having something get out of control, which I might add, the CFTC's own Rostin Benham confirmed in very vivid detail. I continue to wonder if we were as close as I've believed, and that perhaps there's not much time left on this.
Well, what exactly is happening, we're not going to know for sure until this system is down. And even then, we might never know. But my general thinking on this is that when it starts to fall, it's going to be quick. Because markets, especially when an entire fiat system that's 50 years old comes tumbling down, it's not going to let many people on that ride to guess the timing correctly. Whenever crashes happen, they happen very quickly with very few people guessing it right, which is why, which is why it's a crash, because almost everyone's on the other side. So when this happens, almost everyone's going to be on the other side, and only the strongest are going to survive here. This is not going to be an easy battle, but when it comes, we're going to know. It's going to be obvious. It's going to be obvious what's happening, especially to our crowd. And yeah, it's not going to be a step-by-step thing. And once we clear a certain hurdle, it could be $30, it could be $40. That's it. It's going to sky high, whatever, undefined, and that'll be the end of it. But yeah, it's the way markets behave is that they try to get as few people on their back as possible to throw off as many traders as it can, and that's human psychology, and we have to be prepared for that emotionally. Because if you just think this is going to be an easy ride and you're going to be a millionaire when it's done, you're in the wrong game. You got to be strong.
I could write a book about my thoughts on that last few sentences there. But we'll leave that aside for now. And I'm wondering, before we wrap up, how excited you are. You talked about a big announcement or something like that, or it could happen quickly. Would you say perhaps somewhat similar to like when Nixon removed us from the gold standard, of which the 50-year anniversary is coming up next Sunday night?
Yep. Actually, on the Hebrew calendar, it already happened.
All right. Well, I like the excitement on that one. That is what matters in the end. So, as always, Rafi Farber of the Endgame Investor. You can find him on Seeking Alpha, or you can just go into the description field in the link below and click on it there. So, Rafi, thanks.
Let me just say to the viewers here, if I do get delivery on the contract and we can make them into coins, my subscribers will get some COMEX coins if we can make them into coins.
Well, that's a great reason to go hit the subscribe button on the Endgame Investor. In fact, the cost to your portfolio is quite profitable when you detox out CNBC, put the Endgame Investor in. I might add one last time, thank you to First Majestic Silver for bringing us today's show, run by Keith Newmeyer. The definition of what I would consider a real patriot, honorable man who speaks up against things that aren't right. Ran a company through all that too, which I think is a bit heroic as well. And thank you, Keith. Thank you, Rafi. And it'll be fun to follow the next 2 weeks of action.
Yeah, thanks for having me, Chris. Have a good weekend.
All right, buddy. I'll talk to you soon.
Bye.